Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Market5. I'm your co-host, Joel Alconin, along with Brianna Valesky, and we have Rod David on the line. He's a Market5 maven and author of Futures Market Timing. Rod, how you doing this morning?
Good morning. Doing great. How are you?
Good. Thanks for joining us on the show today. We're 9 minutes away from the open. The S&Ps are under 2,100. Bad day yesterday. You're looking at a little bit of a topping pattern in the market. Maybe you got a signal last Tuesday and confirmed last Wednesday. What are you looking at, Rod?
Yeah, exactly. I mean, everything I do is technical or chart-based. And what I'm looking for primarily is momentum. And if momentum stops, then soon after, price should drop. That is upward momentum. So last week on Tuesday, despite getting past the opening hour and pretty much spending the rest of the day exclusively trading above all prior intraday highs, are you pulling that up? If you look at the afternoon, the afternoon's higher high was unable to close above the morning's high. So I call that traction or lack thereof. So you've got and this is it in a nutshell. You've got the singular session, the first one of the rally, that traded almost exclusively above all intraday prior highs of that rally and didn't gain traction. Since then, it's been sideways or flat to lower.
Right. So do you have any downside targets? And you also said you got confirmation last Wednesday. Now, I know I got stopped out of I was trying to do a swing long trade when we ran up and made all-time high, all-time closing high. I think that was at the end of last week. Do you have any targets on the downside?
Sort of. I've got two. And Wednesday was a higher high intraday. We'd already had the signal on Tuesday, so we knew to sell that, and it confirmed by closing, at least probing into the close under Tuesday afternoon's lows. So that right there just told us that formation, if it's ever exceeded on a closing basis, is going to be pretty substantial, a pretty good buy signal. Until it is, it can be retested. I'd like to see it retested. I'm not convinced that we're finished topping. If it's retested and held, my downside target would be much more substantial than if, for instance, last night's decline were to gain traction this morning and just start pulling over.
Okay.
So, you asked for a specific number. We could get, this is basis ES, basis S&P 500 futures, E-mini or not. 2088 near term. If that fails to hold, then 2060 would be a very simple corrective dip.
And what's in your secret sauce to come up with these? Is it moving averages, daily charts, candlesticks? What are you using?
Yeah, and it's a lucky quarter, and
Okay.
It's a lot of proprietary stuff. None of my stuff, or as little as possible, is mainstream. I have a lot of behavioral insights into different timing windows of the day. If you segment the market into different timing windows, different behaviors during those timing windows compared to other prices from other specific timing windows basically dictate or at least limit what opportunities there are for the market. So, for instance, Thursday and Friday last week, you were trading those aggressively, it sounds like. So, off the top of your head, you know that both of those you probably know off the top of your head, both of those were in negative territory throughout. At least the S&Ps were in negative territory throughout each day. Each session probed lower lows, and yet closed back above the week's lows, didn't break lower. Those two sessions combined told us to be bullish on Monday. So when we came in Monday and we were gapping down, it was an easy buy. That's because of the behavioral observations, the behavioral likelihoods. I'm not really looking to predict. I'm looking more as a process of elimination. If certain things happen, then certain other things probably won't. And you get enough of these certain things or these things happening to keep reducing the likelihoods of other things, and you're left with only a few options.
Let's take a look at the gold market here. It came down off the $1,300 level, just spent a couple days above it. And now we're coming down and we're hugging the $1,200 level, actually put in a double bottom, 1190, 1190.60. Got defended in yesterday's trading in 94.60. Now, I saw your comment here, 5-week down leg target has been met. Your bottoming pattern, but you're looking for it to happen soon. Could you go into detail on that?
Yeah, absolutely. That 5-week pattern, we got bearish. I was bearish at 1308.09. I was actually looking for a few dollars higher, $2 higher that we never got before triggering my sell signal. My ultimate target, 1191.50, was tested last week and reacted up. And you're not going to get a bottom immediately. There's 3 directions in the market: up, down, and sideways.
Correct.
And even in the most bullish scenario, you've got to get basing. Well, it's been a week plus, and last week's low doesn't have to be touched again. I was looking for a retest down to 1195. We got that 2 nights ago. Yesterday's attempt to recover 1212. 1212 is the actual level that's being tested. Close above 1212, and I'll get bullish. I'll look at this basing pattern as having finished, close above 1212, get a second consecutive higher close the next day, and that should be it. Off to the races above that 5-week or now 6-week old prior high, on and on. But it's at that point where in the next several days, either by the end of this week or coming out of the weekend, we really have to see a rally underway. Otherwise, this basing pattern starts getting top-heavy and downward.
Let's move over to the crude oil market. Boy, we had the big drop, consolidation here. $50 just seems to be a magnet. We're trading above it. We're trading below it. We're trading at it. Give us your short and long-term outlook for crude oil.
Looking at bottoming pattern here as well, this pattern that we began our conversation with in S&Ps last Tuesday that identified topping, works everywhere and works down as well as up. And that pattern appeared in crude oil a couple weeks ago. I don't get the exact date, but in any case, it identified the end of the decline. Let's see, toward the end of January. It identified the end of the decline. Got some sessions that were spent consecutively, exclusively, under all prior lows, without gaining traction, what I call traction. And nice big rally out of that. Basis futures rallied from 44.50 to 55. That's basis April. That wasn't front month at the time, but same general move. Anyway, since then, the consolidation since then threatened to launch another up leg. I'm not sure we're going to get that without first retesting the low. Right now, I'm literally on the fence. I wouldn't take a position right here. This is basis April. Crude oil above 51.25, 52.65. That would be pretty bullish. Otherwise, I've got to see the low retest.
Okay, can you tell us about your product on MarketWatch before we let you go?
Yeah, absolutely. Thanks. It is exclusively futures, Rod David's futures timing, and it is basically a webinar, a trading room. We're looking at the chart all day long. I'm talking, I'm marking it up and identifying entries and exits. We have several trades. If you just want to do a trade or two in the morning or identify what the trend is, then just show up in the morning and you're done for the day if you want to be.
One way or another, right?
Sorry?
I said one way or another. You put your trade on, you put your stop in, you put your target in, and you let the market come and get you.
Emphasis on the word done, one way or the other, right?
Yeah. Okay.
But as long as you stick to some good rules and good discipline, and I try and reinforce that and talk through the open. Like right now, I should be talking about how the open is actually dipping, immediately dropping back down to the pre-open low and probing it, and so right away we know if 15 minutes from now, this is the timing window at 9:45, if at 9:45, having probed the pre-open low, at 9:45 we would reject that back above this consolidation, pre-open consolidation back above 2100, I can get pretty bullish on that.
Okay.
But otherwise, there's a risk here that we just start cascading down.
Okay, Rod David, MarketFi maven and the author of Futures Market Timing, joining us talking futures with us on the open. Rod, thanks a lot. Have a great trading day. We hope to speak to you again soon.
Thank you, guys. Have a good day.